And welcome back. Zillow did it yet again. They revised upward their housing market forecast for home prices and home sales this year. They cite low inventory levels as the primary reason for this upward revision in their housing market forecast this year. So in today's video, I'm going to share all the details. And before we get started, if you guys want a real estate agent referral, then check out that link below, which is homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. So here's our actual housing market forecast, which was just published today at the time of filming this video, which is May 15th. It says expectations for easing mortgage rates, in other words, a decrease in rates, tighter inventory levels for existing houses have driven Zillow's home value forecast higher for the year. It says here Zillow has significantly revised its outlook for home values this year, now projecting a 3.9% increase for 2023. Keep in mind, this is based on their expectations of home values, not the median sold price in the US here. It says here the monthly home value growth accelerated in April, roughly matching what would be expected looking at pre-pandemic levels for the second month in a row, helping drive the forecast higher this year. Regarding growth in home prices from March to April this year, according to Redfin 1 month ago, the median sold price was $360,000 on a national level. Now fast forward to right now, by the end of April, the median sold price was $369,000. So this means by my dumb math that the median sold price in the US has increased by 2.5% in one single month. In addition, Zillow is now forecasting for housing inventory to be lower than their previous forecast as well. It says the expected combination of better affordability due to their expectation that rates are going to go down this year and tighter inventory levels accounts for the prediction for more upward pressure on home values. So it's taking a step back here. They're predicting that mortgage rates are actually going to go down this year. And on top of that, they're saying here we're going to have a lack of houses for sale. And that in turn is going to put upward pressure on home prices this year. In regards to a lack of houses for sale for existing houses, historically speaking, of course, this is a really good chart to show the differences right now compared to pre-COVID levels. This is on altosresearch.com. So for the week ended May 12th this year, there's approximately 420,000 houses for sale. Looking at pre-pandemic levels back in May 17th, 2019, there was 909,000 houses for sale. This means by my dumb math, that's a decrease of 53% compared to pre-pandemic levels. And of course, the reason why inventory levels are not increasing at the same rate we saw last year, or even looking at back in 2018 or 2019, is because a lot of people have rates less than 4 or 5%. And of course, they don't want to give up their historically low rates, given the fact that rates are around 6.5% for the past 2 months or so. So speaking of rates, Zillow's long-term expectations for rates have been revised downward, which would improve housing affordability for prospective home buyers and provide a tailwind to housing demand. The looming threat of a U.S. debt default could send mortgage rates soaring without a resolution, though that appears unlikely. So in regards to average rates, according to Investopedia as of today, average 30-year fixed is at 6.85%. Also, according to the Mortgage News Daily, it's at 6.67%, a 12 basis point increase compared to Monday. Also for FHA, it's at 6.35%. VA is also around 6.34%. In regards to average rates for 30-year fixed rates, it's at 6.67% again. 1 year ago, it was 5.38%. That's a 1.29 percentage point increase compared to 12 months ago. Now, what's really interesting regarding rates is that they haven't really spiked like we did or like they did last year. So for the past 2 months or so, average rates have been hovering around 6.5% on average. They did spike in early March at 7.1%, but they also fell to 6.16% on April 5th. But overall, over the past 2 months, not a lot of movement regarding around 6.5% on average. Also, as I mentioned at the very beginning of this video here, they're also forecasting for home sales to be a little bit higher than their previous expectations. So they are forecasting for 4.36 million existing home sales in 2023, and that would be a 13% decrease compared to 2022. So the forecast is for more or less 4.4 million. Last year, there was a 5.03 million for the entire year. So if Zillow is right, if we had 4.36 million home sales this year, that would be a 13% decrease compared to the total amount we saw last year. On top of that, when looking at home sales back in 2021, we had approximately 6.12 million in 2021. So if their forecast is 4.36 million this year, that would be a 29% decrease from 2021. Also, when looking at 2020, that would be a 23% decrease compared to the forecast this year of 4.36 million. So to summarize here, Zillow's housing market forecast for 2023 is calling for home sales to decrease by 13% compared to 2022. Also, they're predicting that home values will increase by 3.9% this year due to a lack of houses for sale, historically speaking, for existing houses. So please leave me a comment below with your thoughts regarding this. Is this going to happen? What's your housing market forecast this year? So just taking a step back here, my personal predictions here is that we're going to see upward pressure on home prices based on the data we have today if housing inventory remains at very, very low levels. And on top of that, if we see a lack of houses being listed for sale, this of course is going to put upward pressure on home prices this year. Of course, a lot could change, and I'll definitely keep you posted with the latest developments. And with that said, if you guys want a real estate agent referral, check out that link in the video description below. Hope you guys have an awesome day and look forward to seeing you on the next video.